Hello, this is Japanese Economic Review Channel. Today, we are diving deep into the official labor report for December 2025. Now, on the surface, some of these numbers look really good. But as we're about to see, the real story, well, it's a little more complicated than what the headlines are telling us. And just so we're all on the same page, the numbers we're looking at today come straight from the source. This is all based on the preliminary report that was just published by Japan's Ministry of Health, Labor and Welfare. So this is the official data on how things were looking at the end of the year.
All right, first up, let's talk about the good news. The numbers that, when you first see them, look like a clear win for everybody's bank account.
And this gets us to what is probably the single biggest economic question on everyone's mind in Japan right now. After so many years of stagnation, are people's paychecks finally starting to grow faster than the cost of living?
Okay, here it is, the big headline number. Nominal cash earnings, which is just a fancy way of saying the money that actually shows up on your payslip before we think about inflation, well, they jumped by a really solid 2.4% compared to last year. And that sounds fantastic, doesn't it?
But of course, as we all know, the number on your paycheck is only half the story. To really understand what that money can actually buy, we have to bring inflation into the equation. It's the reality check.
And this is where this concept of real wages becomes absolutely crucial. It's a pretty simple idea, but it is so powerful. You just take your wage growth and you subtract the inflation rate. What's left over tells you if your purchasing power is actually going up or down.
And here's the twist in the story. When we do that math and factor in inflation, the whole picture just flips upside down. Real wages actually fell by 0.1%. Now that's a tiny number, I know, but its meaning is huge. It means that even with that 2.4% pay bump, the average person's ability to buy stuff actually went down a little bit. This chart just shows the whole story perfectly. Look at that nice big bar for nominal wages going up. But then you see what inflation does to it. It completely eats away that gain and then some, leaving people with just a little less purchasing power than they had before.
But believe it or not, the story gets even more complicated, because if you dig into the official report itself, you'll actually find what looks like a contradiction, two totally different numbers for real wage growth. So let's try to clear up that confusion.
Exactly. You might be asking, wait a minute, how can a government report have two different figures for the same thing? It's a great question. Let's break down what's happening here. So, the ministry also puts out this second number, and it shows real wages rising by 0.3%. It's positive, sure, but just barely. So which one is it? Did our purchasing power fall by 0.1%, or did it go up by 0.3%?
Well, the difference is all about how you measure inflation. That first number, the negative one, it uses a price index that's focused on what people are actually buying day to day. Things like food, gas, services. The second, slightly positive number uses a broader measure that also includes the theoretical rent that homeowners would pay. So what's the real takeaway? Honestly, no matter how you slice it, real wages were basically flat.
So we've established that wages are basically stagnant. But what's happening in the rest of the job market? To really get the full picture, we've got to zoom out and look at things like employment numbers and how many hours people are actually on the clock.
And here's where we see another pretty interesting trend. The total number of hours that people worked in December actually went down by 1.7% compared to last year. So, on average, people were simply working less.
And if you look specifically at overtime, those extra hours, that drop was even bigger, down by 3.0%. Now, that's often seen as a sign of business activity, so a drop like this could suggest that some companies are seeing demand cool off a little.
But here is another one of those twists. Even with people working fewer hours, the total number of people with jobs kept on growing. It was up 1.2% year on year, and that tells us that the labor market is still pretty tight. Companies are definitely still hiring.
Okay, so let's try to put all these pieces together. We've got stagnant real wages, we've got people working fewer hours, but we have more people getting jobs, so what does this all mean for Japan?
If you had to boil this entire report down into just one sentence, this would probably be it. The data is painting a picture of an economy where, paychecks are getting bigger on paper, but that extra money is basically being erased by higher prices, leaving most people feeling like they're just running in place. So let's just quickly recap the 4 key takeaways from all this. Number 1, nominal wages, the number on the payslip, saw solid growth. 2, once you adjust for inflation, real wages were basically flat. That growth all but disappears. 3, the job market is still tight. Companies are hiring. And 4, people are working fewer hours, especially overtime, which might just be a sign that the economy is starting to cool off a bit.
And this leaves us with the big multi-trillion yen question, doesn't it? Are we looking at a genuine turning point for Japan's economy, or is this just another false dawn? Is this the beginning of a real, sustainable cycle of growth, or is it just another moment of hope that doesn't quite pan out for the average family? Thank you for watching the Japanese Economic Review. We look forward to having you with us again.